Hello and welcome to Building Tomorrow's Insurer, where we explore the cutting edge of InsurTech and digital innovation in the insurance industry. I'm your host, Nigel Fellowes-Freeman, and today I am very excited to have a fascinating discussion lined up with none other than Alison Cameron. Alison, I've got a most wonderful intro for you here. Over the last 24 years, you've had experience in the United States, Hong Kong, India, across a bunch of different sectors, specializing in governance, risk and compliance. And Alison's currently serving as the head of risk and compliance at HammondCare and leading governance, risk and compliance at Youi Insurance. I think when I looked through a number of your background, Alison, the thing that really stood out was how much you're driving kind of change across the sector from an indigenous perspective, from an inclusion perspective, diversity, and I'd really love to jump into a lot of that today and we'll weave in a little bit of ESG and all those kinds of things as well. And so we'll uncover a bunch of essential strategies and insights that you've uncovered, and hopefully we can share those insights with our audience today. So I'm super excited, and thanks so much for joining me today.
Thanks, Nigel. It's a pleasure. It's a pleasure to join you. And yes, it's not always a sexy topic, governance, risk, compliance, but it is certainly a lot. It keeps the lights on, definitely. It's what every insurer, every organisation, and the regulatory change that's going on and constraints. We definitely need increased focus on this area.
We sure do, absolutely right. And I think that a really great way to start all of these conversations is understanding a bit about the story to really kind of frame everything up. And so can you talk just a little bit about how you found your way into the industry? I think that's always a really interesting place to start. And then we can go into, you've been in the industry for the last 2 decades. And so how has your after entry into the industry evolved over the last couple of decades?
Yeah, it's interesting because I think people probably don't start out saying I'm going to get into risk. Definitely. Governance is one of those interesting words that it has always been around, but there seems to be, it's such a broad topic and people sort of throw it in and most people don't really get the concept of governance, which of course is just decision making at the end of the day. In a simplified way, it's just those structures of decision making. So I very much sort of found my way in through, I came in on the claims side of things. So looking, because I'd come from a building and construction sort of background, then, originally I was looking at scopes of works for claims, was heavily involved with catastrophe management and all things CAT, and then eventually, of course, started getting into assessing and the loss adjusting side of things, which again then really heavily focused on catastrophe management, and I suppose it sort of leads into it because it's very heavily about risk. Mm-hmm. And being able to, and that's all things insurance really is risk and how we're able to balance and work that out. So that's kind of been the journey. I've done the whole life cycle of insurance though. So right from underwriting at the beginning to the claims at the end and recoveries as well. So, but I think the most exciting part is definitely around what's happening in the space for technology and how we can leverage a lot of the exciting innovations that are going on there, both from a regulatory point of view to be able to be compliant, but also, which is simply about consumer protections, really. That's the whole purpose of having the regulator there. So how we can do business and not stifle innovation, really.
Yeah, and is there any major shifts that you've seen recently within the regulatory framework, perhaps, that you kind of call out of major shifts that are currently underway?
Yeah, it's interesting. So, almost the way that we talk about in society of before COVID and then after COVID, it's a little bit like, before the Hayne Royal Commission and then after Hayne. So that drove, I think before Hayne, there was a lot of criticism of regulators that they weren't really holding some of the bad players to account, that there were some practices that were not great, there was, systemic issues, there was misconduct with financial institutions, and unfortunately, insurers get wrapped in that whole bundle of financial institutions. So it may have been happening in wealth, it may have been happening in super, it may have been happening banking, but insurers get dragged into that too. And so, of course, once you've had the commission, then it starts to sort of tighten that up. And then the pendulum swung too much the other way, and regulators very much wanted to show that they were being at the forefront. They were scrutinising institutions. They were bringing in very, very tight controls. So we had an enormous amount of regulatory change, 17 different items coming through, unfair contract terms, a range, anti-hawking, a range of different regulation that meant significant costs to insurers. It was also, it came about in fairly tight timeframes when you consider regulation and how long that normally takes. And so it really is a before and then an after. So we're now starting to see that pendulum slightly correct. And now that they've sort of weeded out a lot of the bad players in there and the bad actors, then we're starting to see now that I think regulators, with the movement of technology and AI and everything that's coming up with that, they're now saying, well, okay, we've got to be a little more principles-based and inclusive and collaborative in what's happening, I suppose, internationally as well, so that they're all getting on the same page. And I think where that's moving is we're going to have the situation where we won't have so much state-based and really independent rules that are being followed. It's going to become much more principles-based. It's going to be much more on the basis of, okay, the foundation and the fundamentals of what the consumer protections are going to be, but it's not going to be as specific as it has been. And that's a good thing, because then that's much more workable. It means that the speed at which change can come about and the benefits of having that innovation is going to be so much better. It's also going to allow for, and you sort of touched on the Indigenous piece, and when we look at disadvantaged communities and minority communities, it's also going to allow for a broader scope of being able to look at how we can solve and resolve some of those issues. Part of that, well, the big part of it is about affordability, relevance, and accessibility. That's kind of the three keys there.
Yeah.
And when we talk about those three things, it's a whole different playing space. There is micro insurance and things like that, but there's a lot of cultural sensitivities that have to go along with that. There's a lot of community engagement that doesn't happen right now or doesn't happen enough. So respecting cultural sensitivities, respecting elders, and how the community functions in those spaces, particularly, in the Indigenous space, and being able to really use that engagement piece. And also, it doesn't happen quickly. It is there is historical mistrust, which has to be overcome, and that takes time.
Yeah, it does. And you've been very involved in the ASIC Indigenous Financial Framework Committee, and which is, I understand, to be very focused on the financial outcomes, I should say, for the Indigenous Australians. Can you tell us what you've just framed up and go a little bit deeper into that? I think it's something that isn't spoken about enough and isn't well understood by the broader industry, I think. And so I'd love you just to bring that to life, and then we can go a little bit deeper, if that's okay.
Yeah, sure. So the framework really is about how you can make, and again, it talks to those three things really around accessibility, whether the products, financial products and are affordable and are relevant. And that means that they very much have to have a look at what is the financial literacy, and improve that financial literacy. And as I said, overcome those historical mistrust issues that have surrounded a lot of the financial institutions, and that includes insurers, of course. So being able to provide products that are going to benefit the community, that there are significant underinsurance issues across a lot of those pathways, without it looking, and this is the tricky balance that insurers have, is without it looking like they're just trying to force their products and just trying to sell products. So it really is coming from the right place, which is to be able to provide something that is going to be meaningful, that is going to benefit and improve their quality of life. And to do that, so the ASIC, have come up with the Indigenous Financial Framework. It's something that gets reviewed. 22 was when I was sort of more involved in being able to provide, I suppose, input and share insights of what that could look like from an insurance perspective. And some of the things that come up with is that there are community programs that go on. So there's a number of opportunities to be able to work through community partners. So that can be, some of the organisations, and work through the organisation to be able to offer, and that tends to build that trust. And it also helps to be able to translate the products into something that is really needed. Microinsurance, of course, is quite a popular idea to be able to, from an affordability point of view. So being able to really offer bespoke user buys, not a one-size-fits-all type of product, is a good solution. But it's not the only one. As I said, sometimes when you're working through partners, there's an opportunity, community partners, there's an opportunity to also provide some good quality products that meet that affordability component.
Yeah, Alison, with the micro insurance strategy, I suppose, was it ever discussed around how that's delivered? I think if you look globally, I think Asia probably does the best job. I know you've probably got a view on this. Asia does probably the best job I've seen globally on micro insurance and how it's delivered. Have you got any views on that around the strategies that could be employed by insurers to deliver these micro insurance products?
Yeah, look, it comes down fundamentally to stay in your lane. I think that, which is, a basic business principle, but not trying to be all things to all people, and not trying to branch into products that is really not your skill set and is really not the foundation of the insurance company. If your expertise is around, delivering motor insurance, stick to that. That's kind of key to it. I think where sometimes insurers go wrong is trying to be all things to all people, and that's never a great business strategy. So finding those key networks, and this is something that Asia does really well, is being able to clearly identify who their target market is, exactly, how they can make those inroads, and what products are going to be the most popular and successful and benefit the most, and really key in on those specifics, and not try to do it as, and again, micro is definitely about being quite, it's not a one-size-fits-all, it's being able to break it down and have components that you're only insuring. And really, we saw a lot of that moving life insurance moved in the States to this long time ago, where they really focused down and they were offering people, you could go onto an app and you could buy life cover for a specific flight that you're about to get on. So, maybe it's about focusing in on what is most valuable to people. Obviously, that's a life insurance product. But if you looked at general insurance, people are only going to be focusing on significant assets that they've got, or maybe small, personal items that they have, that's the coverage that they want, and they only want it for specific times. And that's how low level and specific it needs to get. But again, it's stay in your lane. Like, don't try to offer, all components if that's not your skill set and your specialty.
Yeah, don't move away from it. And I think one of the things that you've spoken about a little bit, which I'm interested in your perspective on, which is you have a leadership position on governance, on risk, on compliance, and kind of my view is that it's pretty critical for insurers today to kind of adopt a proactive approach to regulation and compliance, especially with these new technologies, AI. We lasted maybe 15 minutes before I brought it in, so I think we've done pretty well so far on the pod to not bring AI within 15 minutes, but we're going to go there now. And so with those technologies coming in, when we look at regulatory frameworks around the world, you look at how Europe's approached this, which is more of a sledgehammer approach of we're going to set the scene and we're going to kind of top-down direct it, and maybe the US approach is slightly more open. I'm interested in how you think about this. How do you think about insurers adopting a very proactive approach to regulatory compliance around the different technologies that are coming down the pipe today?
Yeah, and it comes down to relationship, which has been really interesting. And I've worked on the regulator side as well. So I have worked for the regulator, and that gives you a unique perspective as well, because then you start to sort of see the behaviours. Really, it is now definitely about being proactive, but the transparency piece is key, and early engagement with regulators. And that comes from a breach perspective, but also product services, any significant changes that you're doing in the organisation. They need that early engagement. They need to be definitely staying updated and keep abreast of, how regulatory updates are going to impact them and what that's going to mean down the track. Any submission of reports has to be really, really comprehensive. So it's don't just give the bare minimum. It's about making sure that, you really are providing a thorough and accurate, information. And then again, establish those sort of internal compliance programs and the controls, but be very transparent about what you have, and being able to sort of collaborate on an industry body point of view so that you understand what's going on there. Make sure that you're having regular meetings with the regulator, even if you feel like you don't really have much to disclose or discuss. That regular engagement is critically important, and really invest in training for staff. I think that's the kind of other key.
Interesting. Very interesting. If we were to extend that to ESG, there's increasing scrutiny here. There's new regulation coming, which the tier ones obviously have to adhere to very soon, and obviously that's going to roll through the sector over the next couple of years, and that will filter all the way down into the vendors, similar to our business, that supplies those carriers, and those regulations feel like they're going to be reasonably onerous, I think. And I still feels unclear to me on how that reporting is going to be done in terms of actually how do we even measure the things that need to be measured and reported on. And so I'm interested in maybe what you've seen in Europe that's kind of worked effectively here, and how we should be thinking about that as an industry to implement those things here. Because I know that there's, from the exec conversations I have, there's a lot of scrambling going on, a lot of trying to understand, a lot of using consulting houses to try and understand where they need to go and what they need to do. And so I'm interested in someone who's within a carrier actually at the coalface, putting these things in place, how you're thinking about it.
Yeah, look, this has been something that, gets discussed so frequently, the whole ESG story, I suppose. The biggest challenge at the moment is the definition of the measures and the metrics. And there's a big divide, and it's not a universal definitions, not universal metrics of how to measure. So that's something that has to be straightened out straight off. Like that's kind of the key to it. The UK, they've kind of already got sort of, Section 172 statement and the Financial Conduct Authority, where that sort of has them looking at their ESG disclosures. They have reporting requirements about principles and provisions for board effectiveness, for risk management, for stakeholder management, how they integrate ESG considerations into their corporate strategy. And then, of course, you start to look at any of the task force that are going for climate-related financial disclosures. So encouraging companies that sort of have a look at what their risks and opportunities and their governance strategy is in relation to disclosing climate-related risk. So we're probably usually 12 to 18 months behind whatever UK and Europe is doing. Europe is slightly different to the UK in that they're looking more from that EU taxonomy regulations. So they're looking about a classification system for economic activity and sort of, what those disclosures are going to be. They're looking very much around their low-level management reports having ESG factors in it. So that's much tighter. I think probably all frameworks are going to have that materiality assessment component to it. It's definitely going to be something that is at the forefront of everybody's systems and reporting, is, now being able to capture all of those, waste, water, energy, emissions, all of the basics of that's now very much being measured by a lot of organisations, and some doing it well, some are just at the beginning of the journey, I suppose. And then it's going to be about, again, enhancing that transparency and, being held to account. So, again, like we're almost right at the beginning from a reg point of view, where it's moving to principle-based in most other areas, which is better. It's not with ESG. It's still so fragmented, and there's going to be different rules for different areas. And so that's problematic. And again, it's the measures. No uniformity in the measures and the metrics and the definitions.
There's a lot of the technology ecosystem that listen to this pod. And I know when I speak to founders and CEOs, CIOs, risk and compliance guys at those companies that service the large carriers, there's some nervousness. There's some nervousness around how are they going to do this reporting. Obviously, CPS 230 and all of this emission reporting and all these things that are trickling down to the ecosystem. There's some nervousness around how is this going to be done? Are you working at all with your ecosystem partners at all? Are you thinking about how to do that? Interested in someone who's leading the way. Have you got any advice or any thoughts or how to start conversations with the carriers or the customers that you work with?
So yes, definitely. I think it's we need to leverage some of the agreements that are going on internationally, and also with regional counterparts like APAC region, and start to the discussions that I'm having from a technology perspective is to say, we're kind of all in this together, and if we can start to work together to develop what those metrics are going to actually look like and what's going to be meaningful, and get a baseline and a benchmark for that, then that's a proactive approach rather than waiting to be told this is what you have to do, because the regulator is very interested also in being able to hear what's going to make the most significant change for and benefit for consumers. So that proactive stance to say, okay, that's fine, let's kind of work together, get that collaboration going, and start to look at what those potential agreements could be, and then also having a look at what other monitoring is happening. Again, steal with pride, leverage some of the stuff that's going on in Europe and the UK to work into our own frameworks and our own sort of policies from the beginning. This is the time to do it absolutely right now. And it's interesting because finance and insurance concentrates from the ESG perspective very much about the environmental factors and the sort of the governance component there from the decision making. That social aspect, that's the difficulty in from a measuring point of view, becomes more difficult. And definitely that's something I think that is going to take everybody a little bit by surprise, because there's not been as much focus. When you look at other sectors, and certainly in the care, like, health, aged care, those sectors are very much focused on the social because that's there every day. And so you can see that's, if you look at mining and people like that, that's all about environmental. Finance has been about the environmental and the benefits they can make, but I think there's a big gap there, and there's an opportunity to really start leaning into the social. But that becomes probably the most difficult to measure.
I think leadership is very important there. And you're saying, talking there around looking at other sectors and other geographies to learn and to bring those into our sectors, a really important thing to do. And that takes leadership. That takes leadership of the CEO. That takes leadership of the C-suite and senior leaders. Have you seen different ways for that exec team to champion compliance initiatives within the business? Have you seen any great examples that you've seen or been part of how sometimes they've been championed really well and then it's kind of filtered through the organization really effectively?
It has to be top down, and it's very much got to be a focus of the board and the CEO. There's, from an ESG perspective, there's companies that have already been quite advanced in how Suncorp's an example. Suncorp has done fantastic work, and I think it's because there's a lot of organisations, there's a lot of companies who don't like to be an early adopter, because they're like let's sit back and wait and just see what everyone else does. I think from a regulatory point of view, that's a dangerous stance to take. And I understand why they do it, because they want to just sit and cruise somewhere in the middle. They don't want to stand out for being at the top. They definitely don't want to be at the bottom. So by being an early adopter, you take that risk. But it also shows that you're really setting the tone and you're setting that direction. And it's the only way to do it. So I think that's the successful component, to say, we need to jump both feet with this, jump into it, set the tone, and work, again, stay to your lane. What are we going to be most focused on? What's going to be most meaningful? What are we about as an organisation? It has to align to your objectives. There's no point in you starting to go down a track of saying, oh, well, this is going to be critically important, but it's at odds, because you happen to be a plastics manufacturer or something like that. Mm-hmm. You can't be misaligned with whatever your whole core purpose is as an organisation, regardless of what sector you're in. So I think that it's about jump on board early, set the scene, and then that's a very clear goal and direction for the whole organisation. And they go, oh, okay, yeah, I see that. The board has set that. That's one of our kind of strategic objectives. Then you can make that very clearly written into all of your documentation as far as your frameworks. This is a dedicated component. We are focused on this. We want to comply with, social components of ESG. We're all about being able to develop these products. That's fantastic. And then that is translated not only for the whole culture for your organisation, but then you're having those discussions with the regulator, say, this is what we're about and this is where we're focused. And that's a really positive thing. Again, it's that proactive thing which nobody really likes to do. No one wants to be the early adopter.
Yeah, but there sounds like that proactivity, especially when working with a regulator, something that is often sounds like it's really appreciated by the regulator and allows you, to build a relationship when you're trying to do different things and you've got a relationship that's already there. You can have, kind of grown up conversations around what you're trying to do and how that fits with the regulators' asks and demands and needs and finding a way forward. I think kind of collaborating on it versus building in a box and then coming out and saying, does this work?
Yeah, and also the regulator is there to also help support. So if you have those frequent conversations, they're going to say, hey, hang on a minute, maybe you're going a bit off track here, or what is that going to look like? And they can assist. They're not there to be the police. They're there to help protect consumers. That's what they want to do. So they're going to be asking questions and coming at it from a perspective that is purely about consumer rights and what is going to be best for those. If you're having those conversations, then, they are going to help guide you and steer you away for if you're going off track. If you're hiding in the corner, you're looking sus, really suspicious. And if you're just trying to fly under the radar there, oh no, let's not talk to them, then if something goes wrong and then you've got to start, that's a very hard position to start from when you haven't built that relationship. You want the situation where you can almost pick up the phone and say, hey, can we get together because this has happened and we need to talk it through. And if you've been completely transparent the whole way through, great. That's so much easier rather than, oh, I know you haven't heard from us and we've been hiding in the corner, but we've got something to tell you.
Yeah. There's a strange parallel here, which is there's an old adage in the venture when kind of raising capital that the venture capitalists invest in lines, not dots, meaning they like to, if you speak to them in one occasion and go and ask for some money, it's very hard to get money from a VC at that point. But if you've spoken to them over a period of time and they've seen a tracking and it's therefore a line on the chart versus just a single dot, they then understand the story, they understand the context, and much easier to earn capital. And so very different situation here, which is regulator and raising capital, but a similar, I suppose, ethos of frequent communication, engagement, and then transparency really helps kind of any sort of decision making.
Yeah, definitely. And you don't want to be the only time they hear from you is when they, ask for a report or they want a deep dive. There's a lot more self-regulation that's going on too. I mean, self-assessment, self-regulation. If you're willing to undertake that, share those results and demonstrate, what you've been looking into. Youi did that very successfully, very good at self-assessment and being really transparent to be able to provide that information to the regulator. Again, that helps, and I think that's a really good analogy about the lines and the dots. Definitely, it's if you want to share information, sure, then just send like the odd email. But if you actually want a conversation, then meet with the regulator, pick up the phone. That's where the conversation comes from.
In a number of conversations, just extending this a little bit, a number of conversations we have with execs, their digital and transformation teams are always asking for more. always asking to do things, and I'm sure your digital transformation teams come to you a lot with ideas and concepts. And some things that we hear are that the volume of regulatory change has really sometimes given like a really strategic paralysis around execs, because they're not sure what else is coming, and therefore there's this drive for change, but then there's this underlying concern and a high cost of compliance to these technology changes. Is there anything that you've seen or done within Youi or any organization you're part of previously to try and balance that around the volume of regulatory change, dealing with that paralysis, but allowing that innovation to happen underneath in a, I suppose, a collaboration of all those three things?
Yeah, Youi is interesting. Yeah, Nat Simpson from Youi he always talks about progress over perfection, and it's a great adage to have. I mean, certainly there's compliance that has to happen, and they definitely obviously always meet that compliance. But it's also about being able to test the waters there and not have regulation stifle innovation, which it's never meant to do, which is why that principles-based approach is so much better rather than being so specific and honed in. It's about the broader concept of consumer protection. It's interesting because you've always got to balance that whole risk element in technology as well, when you look at in the cyber space, and that's probably cyber, is right up there with the number one of what keeps everyone awake at night, because it tends to be not an if, it's a when, mm-hmm. and then, how you're best going to protect the organisation and its consumers. So I think definitely around being able to use those, there's regulation sandbox environments that you can use as well. So that can be a safer approach to be able to kind of test things out. This is a generalisation, but IT areas of the organisation, it's great because they get really excited and they've got some great ideas that want to happen. But I think sometimes it just takes that moment to say, hang on, just because we can, should we?
Should we?
And it may be that, they're coming up. And there's really good things around, natural language models, large language models, from a, by AI perspective. There's some great ideas that are coming, but it's about how can we do that in a safe environment and how can we ring fence it. ChatGPT, is interesting, and, there's Microsoft Copilot, there's a number of them. And the amount of times that you see individuals in the organisation, for the best intention, will upload things, personal information, customer information, whatever it is, sensitive information, upload it as part of something that they're working on into ChatGPT or whatever, not realising that once it's there, and
mm-hmm.
and it's out. So that's that's every organisation's going through that. What should be happening is, it's no good to just tell your employees don't use it, because they will anyway, they just won't tell you. It's about saying, okay, what is the best version that we have of that to be able to ring fence and protect the information and keep it safe. And there's plenty of opportunities to do that. So I think IT departments is great. They've got some amazing ideas, but just think it through a little further as far as, is there an opportunity to not only, use new technology, but then have it in a safer ring-fenced perspective. That's kind of the balance that I think is not always thought through completely. I think insurers too, just from a retention of information perspective, and certainly from an actuaries and an underwriting, you know, they're hoarders, and they love that information, and they don't want to let go of it because it could come in handy one day, you know, and they sort of need to, Maria Kondo, you know, they need to be able to decipher and say, well, you know, we were capturing that way back when. Do we really still need to hang on to that? Because from a breach perspective, if you breach, you have to remediate back to when you kept that info.
Yeah.
So if you kept that information back in 1999, guess what? You're remediating all the way back to that. And that's just brutal. So really taking a close look, you know, from a data governance perspective, like who has access? How long do we keep it for? Are we using it for what we said we'd use it for? All of those sorts of basic rules that go by the wayside so quickly. And particularly, yeah, as I said, underwriters, like, they love that historical data. It's like, no, it's going to come in handy one day. I just know it. No, got to get rid of it.
Yeah, the breadth and depth of that data and data governance is key. It sounds like it's key in terms of implementing these new technologies, data governance plus compliance, plus the innovation. Yeah, these kind of three critical areas that have to work together in order to, like you say, use these different technologies, LLMs, whatever it is within the organization, because it's important to use them over time. I think they're going to be very, very important in every organization around productivity and around enhancing people's work. But I think there's a lot of work still to be done, taking these technologies from the kind of POC stage into actual production and into using customers' information and delivering services to customers. I think there's still a bit of a way to go, but I think the next 12, 18, 24 months, I think we will start to see that when everyone starts to get themselves in shape. But we're in that, I suppose, kind of forming stage at the moment around trying to bring those different groups together within each organization.
And thinking about how, you talked about how insurers or companies can be a little bit proactive. What are they doing? Again, and not wanting to adopt things because they not want to spend the money because they're a little bit cautious about what's going on there. If you've got those safe environments, that's one thing, but also looking ahead, keeping your finger on the pulse and the regulatory updates. There's always whispers going on. There's always stuff that you can see going on. Privacy Act review, I mean, everyone's kind of holding their breath a little bit about this because, but we know that that's going to very much include things like greater powers for consumers to be able to remove their information. We know that that's going to happen. So anything you're designing or building now, you need to be able to unpick that customer data. At the moment, I think most companies will have a couple of legacy systems. Maybe they'll have their new whiz-bang whatever that they've just bought and implemented, and their API integrating with everything else. Great, fantastic. If that customer data is sitting in there and then they're no longer a customer of yours and they go, guess what, I want to pull all of that information back out. I want you to wipe every footprint of mine. How are you going to be able to do that? So anything, because it becomes Swiss cheese, because there's not necessarily in a beautiful little box with a bow that information. There's bits of it. Now, can it be re-engineered and put back together to identify who that person is? Maybe not, but there's enough components out there that, this is where the Privacy Act is going to be sort of critical, is to what extent do we have to do that? So I think that's something to be mindful. Anything that's coming in from an IT perspective, that's great if you've got the information and it's getting sent here, there and everywhere. How can you unpick it if you needed to? Can you remove and scrub that information?
The cost for that. I think we spoke to an unnamed carrier a few weeks ago, and I think they're in the teens in terms of number of systems. And so if you think about that, and Sally's information from the late 90s on a system way back when, trying to find that will be a real challenge. And if possible, extraordinarily costly, I think, if you think about the scale of the organization. So definitely one to be thoughtful of. And just to extend that through from a data governance, you touched on it a little bit earlier around cybersecurity. I think it's something I really wanted to touch on because it's something on the tip of everybody's tongues and a top concern, I think, for all insurers, whether that's ransomware, whether that's data breaches that we've seen a number of specifically in our sector in the last few years. Is there anything that you're doing, any recommendations you have around strengthening the cybersecurity framework, how education across the organization can play a role in mitigating any of these risks?
Oh, definitely. The education piece, like I said, you see these incidents come through all the time. Someone's uploaded it to ChatGPT, someone's done something, and it really is, it's not malicious, it's through lack of education and being able to communicate that very clearly on the organisation. Also, to have a distinct cyber policy is critical now, so that you very much have a foundation document. You've got the rules for everyone to be able to tap into. It helps also IT teams and whatever they're building, they know kind of where the parameters are and what the tolerance is there. From things that can be done in that cyberspace, the number one thing is actually understanding where your data is. And most organisations don't really have that total understanding. Where is all of my data sitting? Who has access to it? It comes right back to data governance, but which is, pretty boring and pretty basic, but surprising that a lot of companies, who have been around for a long time will have a lot of information sitting there. And if there's a lot of legacy systems, they're not completely aware of exactly where all of their information is sitting. So, that's the most dangerous element. And I think that that's the first thing you get onto. Before you try to put in any other safeguarding and proof point and all the other applications that you can put through to things, find out where all of your information is first. Then look at who's got access to it. And then start digging into things like, okay, well, how long do we keep it for, and are we using it? Do we have the right permissions, blah, blah, blah. But that first step is critical, because you won't be able to apply effective cyber tactics until you actually know where all your information is sitting. And again, it does sound really obvious, but I can guarantee you there's many organisations that would not have a clear understanding of exactly where their information sits.
Yeah, absolutely right. I have enjoyed this so much, but before we want to wrap, I'd like to look at the future. I'd like to open our eyes and get out there the crystal ball. The name of the pod is the Tomorrow's Insurance. So we're really interested in trying to stargaze. And so, if you were to start stargazing and thinking about what things are important in terms of collaboration between insurers and regulators, and you've spoken a lot today about this kind of principle-based approach being the way that you get flexibility and innovation. But if you were to close your eyes and kind of project forward 5-10 years, what does that look like? What does the collaboration between insurer, regulator, and regulatory framework look like?
I think it's actually going to, and I use this word cautiously, is going to relax slightly from a regulatory point of view, in that, and I keep using this principles base, but it won't be that very tight, controlled privacy. Yes, that will maintain for consumer protection. So from that element, yes, but things like we've already been through that cycle of knowing who the target market is, knowing who your product is going to benefit, who it's for, who it's not for, all of those sorts of things. That level of direction and nanny state kind of thinking is not going to last, and that's it's not really sustainable from an affordability point of view, because it will continue to drive the price of products up, which is not the aim of it. Yes, you want to protect consumers, but you don't want to impose such a burden on organisations that it's impossible to deliver a product and to monitor it. So it's not even just about how it first is introduced, and it's that ongoing monitoring piece. So I think that's going to relax, maybe that's the word, slightly, and it will become more user-friendly, so that there's an opportunity, because we can have tight controls in all of that space. When you look at what's happening in mobile apps and information and permissions, and how you can target specific customers, you know, it's going to have to relax so that it becomes fundamental foundation principles. That's going to be the I think that's the way that the compliance is going to move from a regulatory point of view. And it's also going to become, much more universal. So we will have less state-based regulation, will become more federally aligned.
I think that's such a great summary. Two things can be true at the same time, which is to have a relaxed kind of framework-based approach, as well as having the protection for the consumer and the customer at heart. You can have both of those things being true, and an innovative industry in a sector that is alive and can innovate and do new things, but also be very kind of paired to the importance of risk and compliance. And I think you've brought so much light to the grey of in terms of sometimes lack of understanding that many folks have of this world within the insurance sector. So thank you so much, Alison. I've learned a huge amount. It's been so great to have you, and I really appreciate your time.
Thank you. It's been a pleasure. Lovely to chat to you.
Thanks everybody at home. Hopefully you've had a really good time enjoying the episode. If you'd like to hear more from industry leaders who are pushing the boundaries of insurance, please make sure you check out other episodes of our podcast series at Building Tomorrow's Insurer, and via our YouTube channel. Follow the content, join us on LinkedIn, links in the description. Thanks everybody, and have a wonderful day.